Day 29 on the journey towards the goal. Today, I'm going to try to explain in detail how and why I enter a position because I've been getting questions about that. I don't use Fibonacci, VWAP, SMA, or RSI. I've been trading for almost 20 years. I've tried it all, and I stuck with what logically and clearly explains to me how and why the price moves, especially in slower moving stocks. The essence of day trading and scalping is the manipulation by the major market players. They're the ones who decide where and when the price will go. You probably noticed it before. You enter a position, set a stop loss, and it feels like the price just knows where your stop is, takes it out, and then continues in the direction you originally thought it would. Today was a perfect example of that. The first thing I look at is the trend. I always open my larger positions in the direction of the trend, and I don't try to catch the bottoms. Second, I use two charts. One is called the day volume, which shows whether there are more market buy or sell orders in a candle. Just because the price is rising doesn't necessarily mean that the buyers are dominating. Third, the deep view chart is amazing because it shows the accumulation of orders at each price level within a candle. I can see market and limit orders as well as hidden limit orders and slipped orders. In this challenge, I'm using a slipped order strategy. These orders clearly indicate when to enter a position because when the price changes direction, a large number of slipped orders appear. The trend right now is downward, so I'm looking for an opportunity to open a short position. It does seem like the price wants to drop, but on the deep view chart, I don't see a large number of slipped orders. What I do see, though, is increasing upward pressure. Take a good look at this buyer-seller imbalance graph. The price isn't moving much, but there are 20,000 more seller market orders than buyer orders. Looking at the price chart, I'd be inclined to short and place a stop loss at $14.56. When I look at the volume chart, I can clearly see that 20,000 shares have already been shorted, but there's a bigger player who's buying everything up with a limit order. Why is he doing that? Because the short trend is dominating and he needs to short at a higher price. Now it's clear that he's buying up all the shares shorted by retail traders. And since most of them place their stop losses right at the $14.56 level, I understand that there will definitely be an attempt to trigger those stops. This way, the bigger player will be able to open a short position at a good price once those stop losses are activated because the retail traders will end up buying everything back with their stops. I'm opening a long position with the intention that at the $14.56 level, I'll go short together with the big player. I'm making a mistake by placing my stop loss too close. That's a pretty rough mistake because in these situations, you need to allow more room for the price to move. 1 cent in this case can make a big difference. I made a mistake and paid the price for it, even though everything was planned out correctly. The price jumped up and triggered the stop losses of the rare short sellers. Well, since there was no longer any point for the price to keep going up and slippage orders appeared, I opened a short position, set my stop loss at that level, and everything then went as I expected with the price going down. Pay attention now to the imbalance. There's a lot of selling pressure pushing the price down. Also, there's a significant number of slipped orders showing up, meaning someone out there really wants the price to hit those stop loss orders of retail traders who are holding long positions. As the price consolidates, I'm noticing that the number of retail buyers is increasing, but the price isn't moving up. So I'm adding to my short position, and now I have 460 shares instead of 230. When the price drops and breaks that level, I'm going to exit because I no longer see any downward pressure on the price. If you enjoyed my video and you'd like to see more analyses like this, please share, subscribe, and comment because it's always more fun when there are more of us.